Hello and welcome. You're watching Closing Trades on ET Now. I am Anisha Jain. Well, it looks like it's a wobbly close to the week because the Nifty is at the lowest point of the trading session or very close to that. 18,060 is where we are at. So throughout the week, we were struggling whether we'll be able to sustain that 18,100 mark or not. And here we go. For now, we are comfortably below 18,100. The Sensex is down 150 points and there's a deeper pressure as far as the broader market is concerned because the mid-cap index is down 0.5% and the small-cap index too is sitting with a cut of almost 40 points. It's FMCG which is under pressure today. In fact, HUL after that entire royalty hike is something which is taking it on the chin. So a cut of almost 4% as far as HUL is concerned, and Nestle too on account of sell call coming in from CLSA is under pressure, 2.25% cut as far as Nestle is concerned. Bank Nifty, that one is the clear outperformer in the trading session today. That index is seeing comfortable gains, and it's both the public sector banking names as well as the private names which are doing a lot today. So HDFC Bank, for instance, is up in trade today. We have SBI doing its bit, as well as other names like Bank of Baroda, IndusInd Bank are some of the counters from the banking space that we are watching out for. So good strength as far as Bank Nifty is concerned. Nifty IT is tracking to be the top sectoral performer. Not for the day because today it's a bit under pressure, but let's pull up the 1 week chart and that will tell you that Nifty IT has seen good gains given the fact that mid-cap earnings were quite strong. So Persistent System yesterday was up around 7%. Today it's Coforge which is up 5%, and as a result of all of that, the Nifty IT was up 2.25% for the week. Separately, in terms of the earnings reaction, in the numbers that we got just in a few minutes from now, Atul Limited was the stock which is seeing heavy amount of selling and good volumes as far as Atul Limited is concerned. HDFC Life was also below expectations, so a downtick there. Hindustan Zinc has been reeling under pressure. The acquisition, related party transaction, a bit of a dividend going away in the nature of royalty to Vedanta, all of this is weighing on sentiment. Havells too is seeing a cut of 4%, a post-result reaction, and similar story playing out for L&T Tech as well as PVR as well. So all of these counters are reeling under pressure on account of the earnings impact as well. But let's take the discussion forward with our guests on the show. We have Kunal Bothra as always. We also have Naresh Mirani as well as Anshul Sehgal joining us to talk to us about what the market setup is looking like. Kunal, let me start with you. 18,050 below that mark. Are we expected to trend lower now?
Good afternoon, Nisha. So I'm not sure that whether we'll trend lower, but then we would probably continue to trend to a range-bound market at least as of now. So the range, as we've been discussing earlier, that was almost 400 points, 17,800 approximately to 18,200 to 50 as a resistance. The only concern for the markets, and I think some of the names which you were alluding towards, the likes of HUL, etc. These are large cap names. These are Nifty 50 stocks, and we look at the list of stocks from the Nifty 50 pack. Bajaj Finance, Finserv, you have Reliance, you have Asian Paints, HUL, etc. These Bharti Airtel, many of these stocks have been at the brunt of selling pressure over the last 1 to 2 weeks, and the fact that these stocks are not getting into any kind of a major bounce just about deteriorates the overall market health. So Nifty on one hand is trading about the 18,000 mark at the support, above the support levels, but the concern for the market is the deteriorating market breadth. So we'll wait out for a point where the Nifty confirms a break below 17,800 mark to go for a short. As of now, the view remains neutral to bullish.
Neutral to bullish, but Naresh, what's your take regarding the strength that we are seeing in the Bank Nifty today?
So the banks are showing strength, but we are yet not seeing a breakout move. Wherein for the last, say, if you look at the last few sessions or almost the last 10 days, the Bank Nifty has not been able to cross that 42,600 to 42,700 mark and close above it. Every time we go there, there is some bit of a selling pressure and it continues to drift sideways. So for now, the bias is positive, but we are yet to see a breakout. Once we start sustaining above the 42,700, 750 mark, that would be a confirmation that the momentum is back. So for now, time to be more stock specific and wait for breakout levels to actually get aggressive.
Anshul, hi, good afternoon. Thank you so much for making time and speaking with us. I want to begin by asking you your take regarding consumption. People were pegging a lot to it, and if you look at the initial take coming in, whether in terms of Havells or HUL or even Asian Paints, it's not looking as exciting. Is it just delayed, or the street is giving exaggerated reaction to earnings? How should we read it?
Good afternoon, Anisha. Thanks for having me. In certain segments, what you said is absolutely right, that you're seeing weakness despite the expectation that things will turn around. But in other pockets, there has been strength. Take for instance, cables and wires. There has been strength both on volumes as also on margins. Even in HUL's numbers yesterday, volume growth, despite inflationary pressures, has been strong. While on the other hand, if you look at fast mover electrical goods, that's where there has been a little bit of a weakness. So there is a sort of mixed trends that we are seeing in the markets in consumption. But our belief is that as commodity pressures ease, it's likely that volumes will come back in the current year, and that will also have an impact also on margins, a positive impact that is. So we wouldn't be so concerned about one or two segments not doing so well in the near term. That is always the case when you are in a reset. Long term, we are in a strong tailwind market.
Okay, but yeah, for now, it's not looking a very pretty picture as far as some of these growth stories as well as consumption name is concerned. Polygab, let's pull up PVR, Inox Leisure, HUL, Asian Paints we have talked about. All of these stocks are reeling under pressure today. So consumption, not the best bet as of the day is concerned. But you know what? Let's go across to a very interesting conversation our managing editor Nikunj Dalmia is having. He's speaking to Romil Shetty from Deloitte India, who is in Davos. So let's try and understand what the outlook is for India and what's the discussion like there. Nikunj, take it away.
The big debate at the World Economic Forum this time clearly is that is the world or global economy tilted towards recession or inflation and energy crisis will continue to really haunt us. And let's take that conversation forward with Romil Shetty, CEO designate for Deloitte India. Romil, so nice to have you back on ET now, and thank you for joining us. Romil, you are joining us from Davos. And what to your mind is the moot point? What is the debate and what are the deliberations centered around? Is it inflation? Is it recession? Is it energy crisis?
As you mentioned, I think globally there's a significant amount of crisis happening, geopolitical, inflation, all of the things as you mentioned rightly. But when you come to Davos here, where I'm standing actually, and I'm actually next to the India Lounge as well, on this particular street, you'll actually see 5 or 6 India-related lounges, whether it's the state governments, whether it's the central government lounges, and that sort of speaks about the optimism. And if you see all of those lounges, you have multiple events actually happening. So clearly, India is, in some sense, the real bright, shining spot globally, and it's really great to see, state governments and others, for example, wooing investors, talking about sustainability, talking about inclusivity. So I think in that sense, the mood in Davos for India is very optimistic. We have a number of business leaders who are actually here. We have the government ministers actually here. So it's fairly upbeat in a relatively, what I would say is in a slightly gloomy, global outlook.
So as we look into the future, Romil, what would you say were the discussion points? Because historically we've seen the World Economic Forum in a sense becomes the leading light. It really becomes the important forum on which economic and policy agenda setting is being done.
I think clearly, the key themes that are being picked up here is clearly, I think, technology one. Technology being at the forefront in everything that is, right, which is in terms of whether it is to do good from a health and equity, whether it is good to do from a business perspective, whether it is to bridge the digital divide. So that's clearly one big theme. The second big theme clearly that's happening in Davos is clearly on the sustainability. So I think a lot of debate, discussion around sustainability and how to make us, and including for a country like India, where we would be developing at a significant pace, how to still keep it much more sustainable. And I think the third is really in terms of the collaboration across the ecosystem. So this is a collaboration between businesses, the academia, the industries, and countries. I think these are the 3 key themes that if I had to pick up from Davos, those would be the key themes.
Well, since you mentioned technology, I'd like to draw your attention to what is happening in the tech world. Valuations have come down. Big tech, US big tech companies are currently in a layoff mode. The way how the tech sector has moved in 2021 versus how it is projected to grow in 2022, there seems to be a definitive slowdown. So do you think the global technology sector is going through a lean patch, or the sugar rush of 2021 is behind us?
Okay, so Nikunj, I mean, I would take a slightly wider view. I think what's happening is really here and now in terms of the tech layoffs. But if you really look at it over the next 10 years, this is sort of, as we say, it's India's decade. It's also the decade of digitization. So really, trillions of dollars are going to be spent on being more digital, whether it is factories, whether it's devices, all of that was going to happen. The layoffs, of course, have happened. Like I mentioned, it's a more a short-term thing. But what is also happening is we are seeing corporates who are not technology companies actually recruiting some of these talent, because this talent is going to be used. This talent is not going into a waste. So it's a temporary phenomenon, but they would get into different areas, and corporates other than pure play technology companies will also absorb them. So I don't really see this as a phenomenon. It's a short term, but going forward, for example, I think the area of tech into everything that we do is only going to expand.
If there is a recession in second half of 2023, which is what economists are debating, do you think developed markets are prepared for it? And what about India, Inc. and corporate India?
You know what I would say, especially in the developing countries, clearly I think people are a little bit more careful. I wouldn't say they're actually putting all their plans on hold, at least what we know as we speak to different businesses. In the developed world is of course a little bit more, I think they're more than a little bit cautious. So I would place it as the developing markets just being slightly cautious, the developed markets being a little bit more, sort of taking some action steps. And, the recession, if you see some early trends of recession as well, they are actually going down in certain countries. So it's, yes, maybe in Europe, it could probably last for longer. US, there are some signs that it may be bouncing back. India clearly, is not showing that recession is having a massive impact on us. So I think it's a bit of a mixed thing, but we look at it in terms of from a growth perspective. I think the amount of investment, amount of wooing that all the state governments are doing, we actually see a lot more, because India being a bright spot, a lot more people coming into India and believing in the India story.
And just to wrap it up with one final question, how do you see 2023 shaping up for companies like Deloitte, which are in the business of providing professional services, consulting? How do you think this year will be different for them?
Yeah, so we are, as Deloitte, and which is a leading professional services firm in the world, our business has been phenomenal. I think we've been growing. We house nearly over 100,000 people in India, nearly 25% of our world's workforce. So we clearly see huge potential. Also, as you know, Deloitte's a very sector-based professional service firm. We also see blurring of sectors, right? Whether it's financial services, telecom, whether it's health, right? All of these sectors are also blurring, and that's really the ability to what we call as imagine, deliver, and run. And that's what Deloitte as a firm is really looking at. Not just thinking about something, but finally actually getting it done and running it. So it's probably one of the best times ever to be in a firm like Deloitte.
Well, Ramal, so nice to have you on ET Now. Thank you for joining us. And even though you are joining us on a cold afternoon from Davos, I really look forward to have a warm cup of coffee with you whenever you're back in India.
Absolutely, Nikunj. Absolutely. We'll catch up with you. Thank you very much.
Grinding lower, that's the texture of the market at the moment, below the 18,050 mark. Though when we had gone to the mark of 18,020, there was a bit of a bounce back from there. So at least 18,000 is something where bulls are putting up a tight fight at the moment. Let's see which way it ends, bulls versus bears. But a proper bull versus bear case is a building for the IT sector, Anshul. This week we saw earnings from a lot of mid-cap companies and a pretty even Steven, kind of scenario. While L&T Tech disappointed, you had weak earnings from Emphasis. There were the likes of Persistent and Coforge that continue to deliver good set of numbers, guidance upgrade, etc. as well. And since the big IT companies have reported numbers, we have seen an up move across IT. Is the worst over?
Anisha, the worst may be over given how the numbers have played out of late. What's quite evident, even though, without really giving judgments about the sector, what's really clear is that the expectation about how bad things could be at the beginning of last year, those expectations have been belied. Things are not as bad as people expected them to be. Orders are coming in thick and fast. And also, spend from most of the customers of these IT companies have not abated. And it's nowhere near as bad as it used to be in earlier recessions. Also, the commentary that one is hearing from most key customers is of a muted sort of a recession. If we take all of that together, and also the fact that Europe is actually not as weak as one expected earlier, it looks like things won't be as bad as what was expected around 2022 beginning. And as a result, these companies of late are showing that in results, and things are bouncing back. Stocks are bouncing back, and that is clearly a good sign for how things are going to be in the next, say, 6 to 12 months.
Interesting trade today, which seems to be working out not just today, even yesterday, is all of these public sector entities doing well. So today you have Coal India, which is again your top leader at the index level. Engineers India is moving on heavy volumes as well, a 5% move. We generally don't see that stock reacting this volatile. Power Grid is up in trade today. You also have other names like the public sector banking names, SBI, etc., which are doing their bit. And then comes the entire defense pack, the likes of Mazgaon, Dog, Garden Reach, etc. They're all doing quite well in trade today. Kunal, what's the topic there, and is this a trade PSU sector?
Yeah, I think the PSU stocks are doing quite okay. They've been the resilient ones. In fact, if you remember, I think a couple of days back when the markets when the Nifty was going through a bounce back, it was the PSU stocks which was actually going through a corrective phase, both the PSU stocks as such as well as the PSU banking names specifically. Today the texture is a bit different. You're seeing the Nifty down some 50-60 points, being a bit more sluggish. But then the PSU stocks as well as few of the PSU banking names, they are the ones which are again being a bit more resilient, and they have managed to show some signs of positive gains. So I think it's more of a balancing act which the markets are trying to just figure out between the overall index as compared to the PSU stocks as such. Now, few of the names which I would be particularly bullish on, looking at the chart structures over the last 4-5 months, from the PSU banking names, I think the likes of Bank of Baroda, Canara Bank as well as Union Bank are few of the names which I would be bullish on even from current levels, and in case if there is any kind of a minor dip in them. From the PSU theme as such, I think something like HAL has come back towards forming a good base at the 2450 mark. BHEL is just trying to go into a time-wise correction around the 78 to 82 odd levels. That's where the stock has spent time over the last 1 to 2 weeks. So there are a few stocks which have shown signs of strength. There are a few stocks which are consolidating. I think that's where one should try and focus on.
Okay, and since you mentioned Union Bank, let me bring on board the fact that ET Now was the first to report on January 16th about the exclusive report that there would be a QIP happening at Union Bank, and now that news has been confirmed. In fact, we know 3,800 crore worth of QIP is what we're expecting in Q4 FY23, and the government stake will come down below the mark of 75% post the QIP as well. So that was about Union Bank, but the other stock in focus is Rallis India. Of course, it was seeing sharp cuts yesterday on account of the earnings miss, but structurally as well, that stock has been reeling under pressure. What's happening in the company and what's ailing that stock? Somit has done the 360-degree analysis. Hi, Somit.
Well, if you see in case of Rallis India, it has been continuously an underperformer, be it from year to date or the 1 year or 3 or 5 year performance. If you see, the stock has hardly given some gains to investors. Now, even if you see in the last 24 quarters, every time the company post earnings has fallen except for 2 quarters. Now, if you see in the last 24 quarters, only 2 quarters the company has managed to react positively after reporting its numbers, while the remaining 22 times the stock has always fallen post reporting its numbers. So what are the factors that have been ailing on the company? Firstly, if you see, the company hardly has any specialty product in its portfolio. Most of its products are generic, and what is happening with the generic product is that the prices of the final product have been falling, but the prices of raw material prices have been continued to hold on the higher side, and that's the reason why the company's margins have been impacted. Also, as the products are generic, the competitive intensity is very high in these products. Now, also if you see, Rallis plants are not backward integrated. So even in the past, we have seen that margin swings are quite common for the company because its plants are not backward integrated. Also, along with this, if you see, the company continues to hold high inventory cost, because of which they have not been able to pass it on to the consumers, and the margins have been on the weaker side when compared to industry. Also, adverse weather condition is one of the reason which has impacted the stock's performance. Now, though in India, if you see, the monsoon has been above average, but it is uneven, and there were unseasonal showers also. Also, dealers are indicating that the inventory build-up with the customers are also on the higher side, because of which the demand has been impacted, and the realizations of the products are also falling down. And lastly, if you see the company's valuations, now the 12-month forward valuation is trading at close to 20 times, which is still higher compared to its 5-year average, and analysts continue to remain bearish on this stock, because nearly only 21% of the analysts tracking this company have a buy rating, while the return potential expected from the stock over the next 12 months is just 3%.
Got it, Samit. Anshul, let's just start with whatever numbers have come in so far. The likes of Havells, Polycab, some of the others. I know we've discussed FMCG separately. What do you make of durable numbers?
As I mentioned earlier, cables and wires within the electrical goods space, that space has done well, while fast-moving electrical goods, those have really not done so well so far in the result season. It has to do with a little bit of a weakening of demand in the previous quarter. And it was also evident that in the month of December, some of that demand came back. It remains to be seen whether in this quarter we will see a continued tailwind in that demand. But clearly, last quarter for the post-Diwali season was a little weak. Regarding consumer durables, clearly there is an impact of commodity prices in that segment. Commodity prices over the last year went up quite meaningfully, impacting margins as also volumes, as most of these companies raised their own prices. Now, as commodity prices have come off, as also some of the increased prices have been absorbed by the markets, it remains to be seen whether consumer durables will revert to growth trajectories in the coming quarters. Our expectation is that that will happen, but we will have to wait and see.
We'll let you go on that note. Thank you so much for joining us. So that's the take as far as the entire durable space is concerned. A bit of a pickup in December, but let's see from here, where do we go? Let's quickly take the closing trades as well from our chartist. Nuresh, let me first come to you. What's the closing trade you are executing?
So it is again from the PSU pack, which looks interesting. That is GAIL India. The stock is on verge of a breakout. So that's a stock I'm looking at 99, looking at a move towards 105, 110 in the short term.
ONGC stock is still holding up about the 150-52 mark on the spot levels, and I believe at current levels looks ripe for a breakout on the short-term chart. So would look to buy that stock. 160 approximately is the target which I would eye on the trade.
Okay, so interesting public sector names coming in from both our charters, GAIL as well as ONGC. On that note, we are slipping into a very short break, but as we do that, we leave you with the fundamental bet coming in from Sanjeev Bhatti.
My top pick would be Bajaj Finance. Bajaj Finance has seen an inordinate fall just because of one quarter numbers being slightly below. But the people are missing the woods for the trees. Look at the amount of gross additions of new accounts. It is a record. The numbers on 27th will be a record profit for Bajaj Finance. I think this is the best time to buy this blue chip. At 5,950 to 6,000, buy Bajaj Finance. 6,500 is coming before the budget. Stop loss of 57.50. My second pick is Bajaj Finserv. That's the holding company of Bajaj Finance. It owns 100% in the AMC. It owns 71% in Bajaj Life Insurance and in the AIF. It is the best play as far as the NBFC goes. And the next thing could be that by the budget they are expecting a banking license. This stock is available at the best valuation in the last 3 months. At 1350, put your money into this stock. Look, keep a stop loss of 1315. Look for targets of 1500 coming in the next fortnight.
Welcome back. Avand Bash as well joining in on closing trades. It's 18,036 on the index, and as we speak, it's a lot of the heavyweights that are feeling the heat this afternoon. So take a look at HUL, Asian Paints, HDFC Life, Nestle, as well as Bajaj Finserv, Infi, and L&T. They're all under pressure in today's trading session. Let's connect with Amit Khurana as well, who's joining in on the show, head of equities at Daulat Capital. And Amit, as if this week wasn't busy enough on the earnings front, you've got big numbers slated next week, the likes of Axis Bank, Maruti, Dr. Reddy's Cipla, as well as Tata Motors. Wanted to discuss Tata Motors in particular, given the kind of ambitious plans that the company has for EVs. What is your outlook on the overall earnings, and what have you made of this news?
Well, overall earnings, I think, for the sector seem to be much better placed, especially from the domestic, demand front. And Tata Motors obviously will be a beneficiary of that as well. But I guess the bigger part of the element for Tata Motors, which is the overseas portfolio, the JLR portfolio, that I guess still has a few questions to answer. And I'm not very sure if this earnings release will give us a very clear direction. And obviously some comments on the capex cycle and their initiatives into the EV, where we are obviously seeing much higher level of activity. I guess those will be the data points that we'll watch out for. I think qualitatively the direction of the business will be more relevant to look at as to how the visibility from the management perspective is working out for 12 to 18 months rather than the earnings per se. So I guess that's what the market is also looking out for, and so are we as well.
Okay, fair enough. That's the view coming in on Tata Motors. Meantime, I wanted to also get in a take on some of the interesting movers in the last week gone by. Let's just check in as to what has made it to the gainers list then. And you've got something like a Macrotech Developers that's gained about 11% or so. There's been a Varun Beverages, of course, which has been pretty active. And then Midcap IT in the form of Persistent System, Coforge, both have had a run up in this week. Kunal, let's get in your take on the charts, Midcap IT or even a Varun Beverages.
So Varun Beverages, I would not be too much bullish upon. My sense is that I think the stock is, after a 2-day or a 3-day of sharp correction, has bounced back. But this is a bounce to actually, I think either go light, reduce your positions, or book out profits, or look to even go for a shorting position over here, because the sense which I'm getting on indicators broadly is that the stock would probably go into another round of correction, and that should take the stock back towards at least the 1,000 mark, if not below that. So I think there should be a good enough margin which could be available for traders who are looking to either initiate a fresh short or maybe buy at much lower levels and look to exit at current zone. So that would be the view for Varun Beverages. From the midcap IT names, the view is a lot more fragmented, because it's not all of those mid-cap IT stocks which are doing pretty well. Persistent Systems did pretty well for itself a couple of days back. Coforge is doing quite okay for itself. But on the other hand, I think stocks like L&T Mindtree, L&T Technology Services, these stocks are still at the brunt of some sharp selling pressure. So I would be a bit iffy in initiating any major trending trades for the IT pack. But then from the mid-cap IT stocks, but from the larger cap IT names, I think HCL Tech is something which I would continue to favor.
Okay, and we're flagging out how Macrotech Developers has actually surged 12% this week. But look at the stock pattern of Sobha Industries today. That is suddenly perking up around 5% as we speak. Amit, what do you think is the best way to play the entire real estate sector? Would you look at buying these companies, maybe building materials, cement? What's the best way?
Well, we've been extremely bullish on real estate as a category. I think one of the sectors which could really give us some very meaningful returns over this cycle, which we believe is very well entrenched and very strong cycle to say, will be real estate. We are playing it through the direct real estate entities in one leg, and of course cement in the second leg. The building material, I guess, will be probably the second phase of the cycle, which is yet to work out. So specifically on real estate, we feel that the underlying trends, underlying bookings, underlying queries, and very important, the raw material, which is the land bank, is extremely in short supply, and there is a very clear evidence that we have found from our channel checks that the land prices have gone up between 100 to 300% over the last couple of years, and very clearly the organized sort of players, the larger players with balance sheet strengths, are looking to sort of allocate capital there with a medium-term objective in mind. So extremely bullish on real estate as a sector, and there are preferred, of course, names are DLF for the Delhi NCR region and Oberoi for the Mumbai region to play. So we are preferring to play the micro markets rather than the pan India at this stage.
Interesting. So DLF as well as Oberoi are your top bets and playing the micro markets there. What's your reading, Amit, so far of the earnings that we have seen from the banking sector? It's been pretty strong, and then over the weekend we'll of course get the numbers from ICICI Bank as well as Kotak Mahindra Bank, and come Monday we'll have to deal with numbers of Axis Bank as well. What are you expecting from the private sector banking space as well?
I think so far the earnings season for private banks has been pretty robust, exactly on the dot. I think the overall credit trajectory is pretty healthy, and we expect that to sustain going forward. I don't see a very significant deviation for the other banks which are likely to report over the weekend and early part of next week as well. Private banks has been our overweight sector for the last 12 months, and it continues to be so. Even though we do believe, and we call that out, that there will be some normalization of the valuations and some corrections here and there, which we are currently going through. So overall, stance remains extremely positive, and any declines from here on is what we are recommending to add to the weightages. But of course, there's a limitation in the sense that most of the insti clients that we cater to are reasonably well exposed to that as a sector. So you've seen some bit of a tactical selling happening there over the last few weeks.
Okay, let's get in those BTST calls as well, going from our charters then. And Naresh, what is it that you're tracking today?
So looking at the PSU names only, ONGC, which is a breakout candidate here, a stop loss at 151 and a target price of 156. Second is a buy on GAIL India, which is again another breakout candidate holding on strong in today's market. Stop loss at 98 and a target price of 102.
All right, Kunal, let's get in your closing recommendations, your BTST call.
So I'll change the stance a bit. I'll go with one buy and one sell. The first one is a buy on CAMS. I've been bullish on the stock over the last 3-4 days. My sense is that the stock patterns are indicative of a major bottom in place for the stock price. So possibly in the next couple of weeks, I would expect the stock to get into a very strong rally mode. Buy with a target of 2450, stop loss at 2250 mark for the stock. And the second would be a sell on Apollo Tyres. Clear signs of a swing breakdown on the hourly chart, stock breaking below support of 315 mark for itself. So keeping 320 as a stop loss, suggesting a sell, targets of 300.
Amit, it's been a week of sorts when it comes to some of those new age tech companies. Nykaa, for instance, shares hitting a fresh all-time low. Analysts as well are talking about how the stock is very overvalued. And then you have, Paytm, where we had commentary coming in from Vijay Shekhar Sharma from Davos, talking about the path to profitability, breaking even, focus on the core business. Wonder where your preference lies, if at all, within this space as a whole.
Well, our preference lies clearly for Paytm. To answer your question straight, we were early buyers into the stock. Of course, it's not performed till date up to the expectations, but we very clearly believe that the management focus now on profitability will eventually play out. In fact, we called that out much earlier. And other than this particular name, we've not really been very, very enthused. Having said that, we do also believe that a lot of these models will now go through their second phase of evolution. The first phase was very clearly private equity, venture capital led, and valuations were the bigger narrative of the entire game. But I guess the phase two, which they are now currently going through, the promoters, the overall, management is running these businesses, will take a far more critical view on the cost and the unit economics and profitability. And eventually, some of these models will survive, which will let's say 2, 3 years, 4 years down the line, it's anybody's guess. But at this stage, we are backing it up with Paytm.
So Paytm is the clear choice there. Naresh, what about the entire consumption basket? As I was flagging out earlier, this week that's been the ranked underperformer, whether it is in terms of earnings reaction from HUL or Asian Paints. PVR is also seeing a cut of almost 8% this week. Avenue Supermarts, that heavyweight is down about 10%. And not just that, names like Lemon Tree Hotels, etc. have also been coming under pressure. What's your take from this entire FMCG and consumption urban discretionary space? Is there any stock which becomes a buy on the correction?
So as of now, we would wait it out because what you are seeing is one, stocks which are expensive, and secondly, which have done really well, they are taking a hit. And in this cases, the correction has not been pretty huge. So I would wait out a little more, maybe another 10-15% lower, then review. So for now, it is a time to wait and watch because once such a say reallocation happens in such stocks, it's not about whether buying at these prices, they can go sideways rather than falling a lot. So they can go sideways for months together. We've seen that happen before. Eicher Motors or a lot of these expensive names went sideways for almost 3-5 years also. So in this case, I would be very cautious given that even if you don't get a bounce or a further correction, they can go sideways longer.
Sideways, boring moves that can continue for the entire FMCG basket. Amit, a word as far as the entire insurance space is concerned, that came into the limelight today. Of course, we got numbers from HDFC Life, largely in line with expectation to a tad bit muted. Tomorrow, we'll get numbers from SBI Life. And earlier in the week, ICICI Lombard was the one that reported disappointing set. So 8% lower on that one for the week. And Star Health too has been trending downwards, down about 7%. And nobody can forget what we have been seeing in LIC. Is there a trade or an investment as far as the entire insurance basket is concerned?
Well, structurally, yes, but I must also, make a disclosure here. We do not have formal ratings on the insurance space at this stage, but we do believe that insurance as a play on the structural financialization is a big opportunity for any investor to capture. But at this stage, we do not have any ratings on the stocks.
India, and we've discussed that stock, the massive underperformance that we've witnessed on a year-to-date basis. The stock has been down about 9%, and post earnings in the last 24 quarters, the stock has incidentally reacted positively only twice. So that's a pretty interesting contender. 225 is where it's currently at. Majority of the analysts, though, still have a hold rating on the stock. Naresh, what's your chart check indicating on Rallis India, and how are you looking at Hindustan Zinc down 6.5% after all that news flow?
So Rallis India, absolutely no view. The stock has been a terrible underperformer for the last many years. The stock used to be at 170 in 2011. Today we are at 220.25. It used to be 250 in 2015, 17, 18. So there is absolutely no trend here. So would avoid as such. So no clear view here. And if you look at Hindustan Zinc, that's something which is more like a price reaction on the news. But the stock actually gave a big breakout about the 330 mark. So I'd expect it to hold the 330 to 345 mark. One could actually be looking at as a contra buy closer to that 330 to 340 mark.
That's a take coming in. In fact, let's talk about some of the earnings which are expected. And apart from Reliance, which of course is the heavyweight, we also have names like Kotak Mahindra Bank that will come out with numbers tomorrow. Ultratech Cement 2 is on the radar. Let me first go across to Somit to understand what the expectation is from Reliance Industries, and then we'll come to the banking names as well. First up, Somit, with respect to the core business of Reliance itself, what's the expectation?
Well, if you're going to see on a consolidated basis, a decent set of numbers are expected. Revenues are expected to be down by around 5%, but the EBITDA is expected to be higher by around 8%. Margins are expected to come in higher at close to 15.5%, while the company's net profit is expected to be 17% higher on a sequential basis. Now, segment-wise performance, if you see retail segment revenue and EBITDA are expected to be higher by around 7 to 8%. Purely on the back of increased footprint, increased footfalls, and operating leverage benefit. Also, expansion is one of the factors because of which the retail numbers are expected to be good. When it comes to the O2C segment performance, that is also expected to be higher by around 6%. That is the EBITDA number I'm talking about, and this is largely owing to the CEZ export tax removal. Export tax was removed over a special economic zone, and along with this, windfall tax was also relatively lower in the third quarter of FY23. Now, because of both these factors, the EBITDA is expected to be higher by 6%. And lastly, when it comes to the oil and gas exploration business, there the EBITDA is expected to be higher by nearly 22%, and this is purely on the back of higher gas prices in the third quarter of FY23, and also because of higher production numbers that are expected to come in the third quarter of FY23.
Thanks very much, Sumit, for giving us all of those details. Meantime, Kotak Bank also will be coming out with their earnings next week. What exactly is the street penciling in then? Let's take it across to my colleague Harsh, who joins in with those details. Harsh?
Well, Kotak Bank is expected to deliver yet another healthy quarter, and I expected to expand 25% year-on-year. 5,400 crore is where that number is expected at. Operating profit expected to go up by 41% year-on-year. 3,800 crore is where that number is expected. Provisions expected to continue to be quite low, but still off a low base in Q2. 137 crore is a very tough number to compare with, but 300 crore is where we are expecting that provisions number to come at, and therefore PAT is expected to go up 22% year-on-year. 2,600 crore is where the PAT number is going to be at. Asset quality expected to be largely stable. ROA is expected to in fact rise slightly, and NIMs expected to be equally healthy as it was in Q2 at 5.2% odd. With regard to the balance sheet, very healthy expansion led by unsecured. Obviously, keep your eyes out on that. Advances expected to rise 23% year-on-year, 5% sequential uptick. Deposits also 5% sequential uptick. So solid growth on both sides of the balance sheet. We're expecting strong loan growth traction. There's going to be a larger focus on unsecured. I did mention that. Margins are expected to be healthy. We spoke about that as well. But commentary on stress in the SME sector is something that one would have to watch out for and keep your eyes on. With regard to deposits, the traction around deposits is to be monitored, especially that CASA ratio, which has been falling in recent quarters, but still extremely healthy, industry best.
Thanks so much, Harsh, for that. But Amit, what about the entire expectation around the budget? Is there a budget trade at all to take ahead of that big event lined up? Maybe industrials, railway capex, infrastructure, because those are the themes which generally do well.
Well, I wish there was one, because considering the low cash volumes that we are seeing and overall volumes being at literally extremely low levels, it doesn't seem like market has any expectations whatsoever. My opinion on that as a house and our opinion as a house and my personal opinion has been that budget has become such a predictable exercise. With the tax element more or less gone, and pretty much all the policy decisions being taken outside the budget as well in the due course of the year. I think the exercise of budget has more become symbolic. The only concern I would have is if there is a significant change which is perceived as negative by the market on the long-term capital gains. So that's one element which one will closely watch out for. Other than that, I don't think there is anything very positive or very negative that I would really be expecting from the budget. I think it largely remains a business as usual, and markets going into this budget with a very, very low sort of positioning. So to that extent, any negatives may also not be very impactful on the market, and so will the positives may get extrapolated post the budget as well.
Okay, fair enough. That is going to be what the street will perhaps closely be eyeing when it comes to the big budget event. But in the meantime, Naresh, let's understand your view then on some of these consumption names as well. Talking about the likes of a Lemon Tree Hotels, for instance, on the charts. What's the outlook on Inox and PVR, Indian Hotels? How are you seeing some of these stocks trending?
So I would be relatively more bullish on the hotel names because if you look at what is happening globally also, we've seen a couple of large hotel names across the world hit a 52-week high. And we've seen a decent correction in a lot of these hotel names, and they are coming out of a 15-year cycle of terrible performance. And so this is a cycle which could last longer. So we've seen Lemon Tree go up from say 60 when it broke out to 100 plus levels, and now we are back to 70, 74. That's a good 25% correction from the top. So that's a good entry point. So in terms of hotels, another one is Indian Hotels, which has seen a relatively lower correction from 350, but closer to 270, 280, that would be a buy. Would be a little cautious on PVR. Watch it out for some more days, because for the last 1 year, the stock has not broken the 1550, 1600 mark. We've come very close to it today. And on the upper end, 1850, 1900 has been a resistance. So it doesn't look like a strong breakdown as yet, so would still be a little cautious, wait for it to reverse and then maybe take a call. But hotels as a space looks interesting in the current day.
For the markets itself, 18,020 is where we are holding the ground as far as market is concerned, we are not going below the mark of at least 18,000. Last 7 minutes of the trading session. Let's see whether we are able to sustain that level or not, because the Sensex is down 240 points. The mid-cap space is seeing a larger pressure, 260 points. And if you look at the advanced decline ratio, that's clearly favoring the declines. The European markets are pretty much in the green, but it's the US markets which are giving us the mixed skew at the moment, and perhaps that's the reason we are a tad bit nervous around the market close as well. But, just wanted to take a sense check with respect to what's happening to some of the losers at the moment. JBM Auto is coming under pressure, 2.5% cut there. Motilal Oswal is down 1.5% in the last few minutes itself. And you also have on the gaining side names like JK Paper, which are seeing quite a bit of spike, as well as some of the cement names are also doing their bit. But from the frontline index, the stock which is coming under pressure at the moment is JSW Steel. That's seeing a cut of around 2.5%. Of course, the company will report its numbers later today. So let's go across to my colleague Asesha to understand what the expectations are. Is the dispatch something which is going to be weak? What's the outlook commentary that the street expecting? Asesha, tell us all of that.
For JSW Steel this time around on a sequential basis, we are expecting the top line to contract due to lower volumes. However, improvement in margins due to lower coking coal and iron ore prices will aid profitability this quarter. Coking coal prices in particular are expected to decline by about $80 per ton, and iron ore prices are also expected to decline a whole lot, resulting in expansion in volumes on a quarter-on-quarter basis. Meanwhile, as far as realizations are concerned, steel realizations are expected to contract a tad bit by about 2 to 3% on a quarter-on-quarter basis, as they are expected to come in at about 59,000 rupees per ton. As far as revenue is concerned, we are expecting them to come at about 39,370 crores, a decline of 6% on a quarter-on-quarter basis. As far as margins are concerned, we are expecting an expansion of about 600 basis points on a QOQ basis. Talking about other internals, EBITDA per ton is expected to be to double on a quarter-on-quarter basis. It could come in at about 7,000 rupees per ton versus 3,500 rupees per ton that the company had reported in the previous quarter. Increase in EBITDA per ton is primarily because of lower coking coal and iron ore prices. All in all, revenues are expected to contract on account of lower volumes. However, improvement or expansion in margins is expected to aid profitability this quarter.
Thanks very much, Asesha, for walking us through all of those details. Meantime, Amit, let's understand your take. Auto Expo out of the way. Lots that has been, focused on when it comes to EVs as well. M&M and Tata Motors is going to see competition heating up within this space. Any key observations on the auto space?
Well, yeah, it was quite an experience for our team to go through the various models being launched, and EV was very clearly the theme. So our take on this at this stage is that we will prefer to play the EV theme through the auto ANGS route, because that's where we see a lot of capability, a lot of investments, a lot of capex being done by various entities across the board trying to set up the back end. The front end, which is largely captured by two-wheelers, we don't see very significant market share being captured by the listed entities. You have large unlisted entities which are still trying to decipher the market appetite and trying to figure out the right pricing points. So it'll take us some more time. Four-wheelers, the listed play is not yet into the EV theme, so to say. It'll take us some time. So therefore, to put it in a quick snapshot, play the EV theme through the auto ANGS is what our call has been.
The EV theme through the auto ANGS. That's the take. Amit, on that note, we let you go. Appreciate you joining us on the show, as well as Kunal, as well as Naresh. Appreciate you joining us on the show as well. In fact, for the next week, the biggest trigger to watch out for is the monthly options expiry. So that is one big thing to watch out for, and the run up to the budget, given it will be the penultimate week when we'll see that. Remember, on 1st of February, not only we'll get the budget, but separately we'll also have that big Fed event lined up. So ahead of that, there might be a bit of volatility. Earnings reaction, well, almost 20% of the Nifty will actually be reported just over the weekend with respect to RIL, Ultratech, Kotak, ICICI, etc. But come Monday and the next week, we'll have Axis, Maruti, Tata Motors, as well as some of the pharma names also reporting numbers. US jobless claims data as well as GDP data will also be important ahead of that Fed event that I just flagged off. So it's going to be an interesting week. But talking about this week itself, it wasn't really a great week for the markets, given the fact that Nifty was pretty much flat, a return of just around 0.4%. It was worse off when it comes to the mid-cap cap space as well as small cap space for the week, because both those indices went home with a cut of around 0.5 to 1%. Nifty Bank was the clear outperformer this week, a gain of almost 0.3%, and today as well that outperformance was clearly visible as far as Nifty Bank is concerned. Sectorally speaking, it was IT that did the heavy lifting this time around, 2.2% higher, led by names like Persistent as well as Coforge on back of earnings, while on the losing side it was autos which was on back foot, plus the metals were also coming under pressure. Of course, Hindustan Zinc was one of the key instances that was under focus today as well. On the gaining side, Coal India was doing its bit, so 5.6% higher for the week. L&T was trending towards the all-time high level. By the end of the week, it slipped a tad bit, but still a gain of around 5%. And other than the we had the entire Adani group of companies is in focus on account of that FPO. So Adani Enterprises sliding around 7%.
Yeah, lots more stocks as well. In the spotlight, you had HUL, and it clearly seemed that today the Q3 numbers were in line with the royalty weighed on the stock. No surprises to see it go home with a 3.5% cut. Asian Paints as well was a big earnings yesterday that came out post market us at the street reacted to. Paytm, Vijay Shekhar Sharma, confident that the company will be able to stick to their guidance of breaking even. So that stock was in the spotlight. You had something like IIFL Wealth, profits were up about 16%. Coforge, a slight miss on their Q3 revenues. Margins as well did come in a little bit weak. BHEL bagging that order for turbine renovation that kept the stock in the spotlight in today's trading session. Meantime, you had something like a Sun Pharma, the plan to acquire the US-based drug maker, clearly weighed down. Morgan Stanley has revised Havells' target price to about 1310 versus 1370. AU Small Finance Bank, the stock on the brokerage radar, coming out with its quarterly numbers. And then, of course, Hindustan Zinc as well as Vedanta were newsmakers in today's trading session. And as we highlighted, going into next week, it continues to remain crucial on the earnings front. Axis, Maruti, Bajaj Auto, Dr. Reddy's, Cipla, and then, of course, the expiry.
But the big one today is Reliance, and we don't know what time it will come, 7, 8, 9 p.m., but hopefully soon.
Hopefully soon. It's going to be a long day, but on that note, you stay tuned to ET Now for all that coverage. On that note, we'll wind it down on this edition of the show. Thanks so much for watching.